What's going on, guys? Matthias here, and we are going to have a quick little review of Tuesday price action and my two trades that I have taken. So starting on with a high time frame chart, I was expecting Tuesday a high of week 2 form and for the weekly candle to draw into this buy side imbalance, sell side inefficiency, because on a higher time frame we have cleared original consolidation and after that it will make sense for price to retrace. We have had an SMT with ES which indicated its weakness and potential for a shift. SMT isn't a be all end all, it's simply a selection and confirmation tool. It isn't like if you post an SMT it's gonna reverse, which many people who trade ICT in an incorrect way do. My idea was further confirmed with dollar index because I was expecting a higher prices on dollar index because if you have a look on this fair value gap, we have touched it 1, 2, 3, 4 times. And have we launched from it? No. If it cannot go lower from it, that means it will go higher and it will disrespect or reprice more into the array. And the second thing is, we are on equilibrium of high time frame consolidation. And in fact, DXY did. Moving on to the Nasdaq 15-minute chart. As you can see, here is 8:30. My initial framework was that we will reprice to the previous fees high with the 8:30 news driver, and after that on a 10 AM news driver we will dump it. Well, it didn't happen. We have already done the damage before 8:30, so it meant if we manipulate before a news driver, we're gonna distribute with it, which in fact happened. We have met our pre-lower Excel objective, I mean the opposing array, which will lead us into lower Excel. We have done it at 9:30, and that was the Judas. Let's have a look at the POI for 10 AM setup, because this one was kind of tricky. As you can see, we have repriced previous fees high, but we have done it on ATH, which means on RTH it should be confirmed, which in fact happened, and we have went there one more time. Well, this is my setup. It pulled to the previous week's high, and more importantly, the POI was news driven buy side, which is a buy side liquidity that forms after a news driver. We have went there, we have swept it, closed above it, dropped down into inverse fair value gap, and went there one more time. So this is gonna be our breaker toward the soup. How far can it reach? Well, the intention behind this price move was the previous week's high. My mistake which I have done was I entered on this immediate rebalance, but the entire market wasn't really connected yet and it wasn't really ready to move. So I placed my stop right above the inverse fair value gap, and as we made this displacement candle, I trail it just above the consequent encroachment, and we have in fact made a time distortion, we were chopping, and I got stopped out for a small half hour loss. We go to consequent encroachment and stop there with bodies on a dime. This is called signature. When we do that, that means price is about to leave and another expansion leg is about to start. We make change in the state of delivery, and inside this order block, we make a propulsion block. We have made quite a big mohawk, which was kind of a Jewish move. We hit the propulsion block once, twice, thrice, and after that, after 3 types of PDRA, it has to work, it has to leave. Otherwise, the PDRA is probably not gonna hold price anymore. After hitting this busy VFQs on the left side, we retrace for our first stage distribution, which is made by these two consecutive fair value gaps. I don't include this small portion because it's buy side imbalance, sell side inefficiency, but not a valid fair value gap in its truest definition. My trade was based on this opening price. As soon as we crossed it, I shorted. It disvalidated the order block, but my stop loss was really well placed and it was based off multiple PRAs, so I haven't been stopped out. We post signature on the lower quadrant of this inverse fair value gap, which again is a sign that price is about to leave. The thing about using last candle as an order block is that when we have a convergence of the candles like that with a buy side delivery, I go to the last one. We hit the order block, we spool, we go below fair value gap that was used as an inversion on the left side of market maker buy model. When we are bearish, we gonna reclaim it. And because of we have used its quadrants, we have used CE, lower quadrant, higher quadrant. That means it's a high probability inversion. This applies with all PRAs. If we went below it, we have done immediate rebalance. That's second stage redistribution. And after that we dropped into barrier, which is a specific PDRA. It's sort of like a doji candle. ICT introduced it in 2024. I took a partial there because if we have sell side or buy side which has really long wicks, we can stop in front of it and have a deep retracement. And the thing about this setup is it was based on launch macro, and if you look who was profitable from 9:30 open, all the longs who were riding were profitable, so it's gonna hunt them. As you can see, ES as a weaker asset went to this wick with a gap down, and when we have two imbalances, we have to connect them into one array. As you can see, we stopped right on a consequent encroachment. And we have SMT, and we have SMT with the news driven buy side. You might ask, why was ES weaker? The first thing is SMT. It said no, I'm not gonna reprice previous V's high. The second thing is, look at the original consolidation. You can see the lows aren't jagged. It's sort of a trend line. But on NQ, if we have a look, we have cleared it. We have made a run to the opposite direction of the original consolidation. When it does that, the low is sort of protected, and the price doesn't have that big willingness to rush to it compared to when it's like that. This is ES 1 minute chart. As you can see, ES was kinda chopping around, but it didn't have a sideways time distortion. It was weaker, and I could have actually avoided my low risk sell loss if I had played ES. We have the SMT as I said. We have much stronger and more prominent displacement. Look how we stop on the low of the breaker once, twice, signatures. We beautifully reprice all the way to the sell side imbalance, buy side inefficiency top. And this mohawk stopped where? This is a sell side imbalance, buy side inefficiency. We went inside it and we lead the range, which means it's gonna act as a balanced price range. After that we dropped, we made signatures on the lower quadrant of this wick, and again displacement and expansion. This is a reclaimed fair value gap. As you can see, it has displacement down, displacement up, so it's BPR. We invert the BPR, but if you think of it as a reclaimed fair value gap, we reclaim it. We post signature on CE, we do change in state of delivery, we hit it, stop on a volume imbalance. This is a first stage distribution. We displace, extrapolation, we do immediate rebalance, which is the second stage. And we finish our morning run shortly post 11 AM with hitting the sell side liquidity. Alright guys, that's it for this one. Have a nice day.